The views and opinions of this program are those of the host, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Today's episode of Market Talk is brought to you by Growmark FS. Keeping up with the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic, grain, and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now, pleased to have with us here on the program, Stephen Nicholson, Global Strategist of Grains and Oilseeds with Rabobank, joining us here today. And Steve, thanks so much for the time here and joining us on the program today. I hope you're doing well.
Thank you for having me, Jesse. Good to see you again. It's good to have a chat. It's been an eventful week, to say the least.
It has been a very eventful week. We're going to talk about that here during our discussion today over the grains and oilseeds. But I want to kick things off to set us up a little bit. I know Rabo Research, you guys just put out a North American agribusiness review. A lot of different topics here in this review for April, looking at grains, looking at farm inputs, etc. Can you maybe just give us some of the highlights from that report, at least grain and oilseed wise first?
Yeah, absolutely. So this is I guess is a every other month report, just so our listeners know, and they can get that at our office. We have an office in Fargo, so you can pick it up there, or you can talk to the banker there, and he can make sure you get hooked up with it. So, but it does cover all the grains and oilseeds. We do cover other things as well, but some of the highlights when you think about. And we'll start with wheat, because wheat's the most, you hate to say this, but wheat's the most interesting crop out there right now. That you don't get to say that very often about wheat. But, talking about the situation of, weather in the southern plains, which is not where you're having too much water there, they're not having enough water. And that situation is not getting better. The other thing I think around that, and this also impacts the corn market, is the whole, Black Sea Grain Initiative. You're not seeing, Russia, we're coming up on this deadline for Russia on May 19th, who said, the agreement was only for 60 days, not 120 days. Can't seem to agree, and Russia's, riding a lot of sabers. I think the thing that need to be cautious of here is that we can see a lot of volatility around that time period, around particularly the wheat market. Corn may get a little bit of the backlash of that as well, as to what Russia does do. The optimistic side of me is that Russia does a lot of saber rattling. This is a lot of saber rattling. When it's all said and done, after a lot of maybe some tantrums, they'll be back in and we'll move on. But corn is likely the big disappointment here. The exports just aren't very good. Acres, still have pretty good corn acres in the U.S. this year. One of the topics we had, and of course that's going to be a topic as we go forward with both the markets, what the market's doing, and of course what Mother Nature decides for us this spring. And so we'll have to wait and see where that comes out. And so those are some of the highlights. I think the other last thing is, of course, there's a whole Chinese demand situation. Is that good? Is it bad? Is it bad for us because they don't like us, or, some sort of political issue, or, what it is? They seem to be cozying up to the Brazilians right now. But as I always remind people on China, China, if nothing, is pragmatic. And if they need something and we have it at the price they want, they will come to the table and buy. That's the good thing about the Chinese. So a lot in there.
Yeah, a lot in there. And I'm glad you brought up China, because I think that will help us with our discussion here, because I've been getting a lot of feeling and hearing from a lot of other folks that they feel like there's a lot of demand destruction going on right now in this market. Do you think that we're seeing that right now, Steve?
It's a really interesting question. It's one that we've wrestled with a lot, and I've wrestled with personally, thinking about, because people go, well, these high prices and demand destruction, and the recession, and everything's bad and it's gloom and doom. And I sat back, and I'm going to focus a little bit on the vegetable oils, because that's the one that's really the easiest to see from a month to month period. And we do see softness in that market, particularly from a price perspective. But it was instructive when you think about where we've been. You think about, we went into COVID, demand just went through the floor because people all stayed home and went to the grocery stores. So food service, restaurants, quick serve, that all went out the door. But as you remember, as we got into late well, let's say early 21,
Hmm.
people were done. Now, right, wrong, or indifferent, people were done and they wanted to go back out. So what happened? You saw this huge, what I call, and I put in quotes, post-COVID demand. You saw this huge surge in post-COVID demand, and the market wasn't ready for that because there was, labor issues and transportation issues and all that. And so we had this huge surge in demand. And so, and from a buyer's point of view, they want to get in the front of the line because they didn't want to get stuck and not have supply. And so you saw a lot of increase in inventory. So you had that huge surge of demand. And now people are going, oh my gosh, demand destruction is going apart. But if you look at domestic demand for oil through January, soybean oil, it's 2% above a year ago. And you're going, kind of scratch your head and think, well, why is that? And I think what's happened is this perception of we have this huge demand, and it's back to normal, but it's still good demand, and so it looks like a soft demand when it really isn't. A good example is corn. You think about corn exports the last 2 years have been tremendous, and now we have sort of pedestrian, and it's like, oh boy, this is demand destruction, looks bad. So I don't want to be all gloom and doom about it. I think it's a normalizing of that demand sector because we came through two pretty crazy years of COVID, and I think we just have to recognize that. So I'm not in the camp that, oh, this looks horrible. Now, when you look at, and people say, well, high prices and recession and all that sort of thing. If you look at domestic demand for corn, wheat, and soybeans, whether it's here in the United States or globally, and you start to put recessions on top of it, you don't see this big downdraft, and you do see, and even high prices doesn't have a big impact on that domestic demand. It does impact exports, and so that's what we're seeing right now is where exports are pulling back a little bit, particularly on the corn side. But again, I think the other thing we're having, even in the GDP, it mentioned it today, the outcome today, is that we see a drawdown in inventories. And my guess is, as we go forward here over the next 3 months, people are going to have to replenish inventories, or they're going to have to come back to the table to get some coverage. So, I think we're kind of in this up and down right now, and we haven't quite find the sweet spot, if you have it.
Well, Steve, with everything going on here this last week or so, I mean, we've seen a lot of fund selling, managed money, getting out of positions here in this market, and pushing through a lot of different key support levels here as we're going into the end of the month. Is there some worry just about a correction here in these grain markets that we've been seeing the last week or so?
Yeah, I think that's it. And you kind of hit on a little bit when you talk about, technicals. I think this market there's a couple things happening here. So one of all, the market hasn't had new news to feed on. And, we're still talking about the war. We just talked about demand destruction. We're talking about, what's China going to do? This is not new news. This is kind of news that we already know. Excuse me. And so the market's like, well, I don't have anything to talk about. So it's, we're the easiest, the path of least destruction is down, or path of least resistance is down. And so I think the market's reacting to that. I do think too, is today you're running up against that delivery for the May. And so people are trying to get out of the May and, kind of move their positions a little far forward. And the funds, we can argue about the funds. Are they leaders or are they followers? And they will argue to their followers. And you mentioned it earlier when we're talking off the air, you start to hit the algorithms, the computer trading, whatever description you want to use. And so this gets a little, what I would say, it just gets overdone. And you start to look at some of the technicals on these markets and the RSIs and stuff, you're getting to a place now where the market's like, we're oversold. And I would think we're getting pretty close to that spot. And I'm a little worried. You look at these corn breaking through some old lows today, as we look at this on a Thursday, the 27th, and you have to think, oh boy, is there more, what is there more downside here? So as I always say, one day doesn't make a trend. So let's see what the next couple of days look like before we get too excited one way or the other about this. But it does seem like there's a lot of technicals that has been driving the market of late rather than just the fundamentals, because the fundamentals are still solid.
Well, Steve, tying in with all of this, of course, our farmers are planting a very expensive crop right now. The cost of inputs has been on the rise. What are your thoughts with just the state of farm inputs tying into all of this?
Yeah. So we've been talking about the state of farm inputs for 23 really since almost the end of planning in 22. And one of the things we talked about, and we've had a lot of questions about what do I do with my 23 crop? And we've talked about understand where your costs are, what are your margins, what can you, and do you have a goal? Do you want to, is it a percentage goal? Is it a, so many cents per bushel or $1 goal, whatever it is, let's determine that goal and then market to that. And so now you start to look at corn, getting closer to that $5 area on the board. Now, granted, basis it remains still fairly stiff, fairly tight, so that helps. But you're getting to the point where corn is, it's costing $5 or more to put it in the ground this year because of whatever measure machinery costs or diesel costs or land costs or fertilizer costs or seed costs, whatever. It's all of them this year. You're now getting to a place where it's a little bit more that margin gets a little squeezed. We do still think that 23 will be a positive margin year for most producers, but you have to be able to lock that margin in to say that I have a positive margin for the year. So, if I was a producer right now, you look at this downdraft here the last several days, you think, now what do I do? And that's a tough call. Again, if you don't have anything on for 23, then you need to do some, you need to really get that paper, that pencil sharpened up and really look about where you are and what you can lock in. Can you lock in some margin now? Yeah, I think that, if you can do that, you probably ought to do that. And if that's the worst margin you lock in for the year, so be it. But if you've got some coverage in front of you, then you've got a little bit more cushion to kind of wait this out a little bit to see if you get a little backup. Let's say the weather turns bad over the next 10 days. And right here, we get out of the fields for a week. The market's going to pay attention to that a little bit. Again, I know it's a busy time of year, producers, I get it, but it's also time you need to pay, you got to pay attention as well.
Steve, great thoughts and great analysis and advice. Any final thoughts you want to mention or reiterate for folks here today?
Yeah, great question. I always think about, where the farmer is, what he's thinking about. And I think the thing is that there's so much coming at him or her so fast these days, it's hard to keep up with it. And I would certainly, farmers have just got to be paying attention all the time and just don't feel, spring is a time where farmers can get pretty overwhelmed. I get it. But just take that breath and then, do what you can control. And the thing is, you can control what your decision making is. No one else can do that, only you. So look at those margins, pay attention, and keep track of it.
Well, we appreciate the time with that. Stephen Nicholson, Global Strategist, Grains and Oilseeds with Rabobank. Thanks so much for joining us. We'll talk to you again soon.
Thanks, Jesse. Great to talk to you.